Mode.
Hi, this is Jim Hyerczyk with Autochartist, and today we're going to talk about the Forex markets, and our webinar is titled Trade Forex with Autochartist. Before we start, just want to remind you, I've shown you this disclaimer prior to the webinar. Just want to remind you that there's risk involved in Forex trading, and that you should consult an expert when trading Forex markets with real money. And today we're going to talk about situations taking place in the market, and if you are trading, you're trading at your own risk. Okay, the first thing we want to look at is the Autochartist platform, and it's designed to be very easy to use. You don't really have to know anything about technical trading to trade the platform. It does help, of course, that if you do have a background in some of the basic mechanics of Forex trading. You should be familiar with the terminology of support, resistance, breakouts, things like that. But as far as everything else is concerned, the chart pattern identification, Fibonacci patterns or key levels, all these items are defined in the user manual. We have educational background research and background materials on the website, and we also have those search buttons that we can find and define certain terminology. The thing that catches most traders' eyes is this center, which is this chart. That's where the chart takes place. All right, I can blow up that as I showed, just going to go, and I can take a look at more in depth and more detail of what's going on in the marketplace. So it's a very graphic and very visual program. All right, so the first thing we want to know is how you want to trade Forex markets and what you want to look for. And today's an interesting day because we do have a European Central Bank meeting, and we also have a Bank of England meeting. So immediately in my preparation for the day, those two are the markets that I want to focus on. So what I've done here in our search box is I've created various searches that speed up my process of analyzing the Forex markets. And they range from setting up searches on a time basis. In other words, I can look at 15-minute charts, 240-minute, 30, 60, or I can look at all intraday if I want to. I can also identify which markets I want to look at that have high breakout capabilities today. And I can look at longer-term charts such as the daily. And I can also quantify my search even further by looking at triangle patterns or a specific market. So right now I want to focus on the euro because it's a market that has been in the news, of course, recently, and it's also been it's also in the news this morning because of the ECB news, their news. So what I'm doing here right now is I'm going through the normal process that I do of searching down my search panel, looking for the most active trading patterns. In my search box, or in that process, after hitting the FX majors all intraday, all the trading opportunities I want to look at populate this lower box down here. And I've selected my search criteria to include chart patterns that are completed and emerging. Now, emerging patterns I like to look at first. And here you can see the first one that's emerging is a British pound US dollar on a 15-minute chart. A triangle formation. Okay, and studying the markets, I know that triangle pattern, which this one here is a very symmetrical triangle pattern, but knowing a little bit about triangle patterns that are discovered by Autochartist, I know that this is what they call a non-trending chart pattern. And it's non-trending because inside here, as the pattern forms, you start to see this congestion taking place in the marketplace. The ranges are getting smaller. And what this is indicating is that there's an emerging pattern taking place, that prices are getting compressed, and that I should be preparing myself for some volatility or a breakout. The longer we stay inside of this triangle and we start to approach this apex area, you can see that the support and resistance line gradually narrow, and at some point we're going to get a breakout in this market. So one of the best patterns to watch with Autochartist is, if you're a trader that likes breakout moves, is to watch for these triangle setups. So this one just came up within the last few minutes, and what it's saying is, as I mentioned, that Autochartist has identified this pattern as a triangle pattern. You can see in this box. It's a 15-minute chart pattern. So usually if you're going to trade a 15-minute chart, you're not looking for a longer term move or a pattern that you're going to be in all day. You're looking at a market that is probably going to give you a quick move. So this is more suited for the scalper or the momentum trader. Somebody wants to see something that moves fast in their direction. And so what we have here is the quality of this pattern. This is where Autochartist determines quality. The quality of this pattern is 5. And what that is, it's a combination of the initial trend, the uniformity, the clarity. Of course, we don't have a breakout yet or a forecast price because we're still trading inside of the support resistance lines. Okay, so what we're looking for is what I call the 2 quality indicators that represent a movement outside or before the pattern has been formed. So one is the initial trend, and what we look at here is this is what the trend was prior to the formation of this triangle. So right here is where the support line was drawn first. You can see that the market was sideways into that first bottom here on this candlestick. And that's the reason why we have a 1-bar initial trend rating. If it had been a long, hard break into this area, then we would have had a higher initial trend rating. So this is telling me we had a slower, weaker, relatively weak initial trend. Okay, now after that, the market proceeded to form resistance and then moved into a pattern, this triangle, moved inside this triangle pattern. Now the quality indicators that are inside this pattern are represented by the uniformity and the clarity. Now uniformity is rated high here. It looks to be about 7 bars. And so what that means is that the program has picked up equidistant tops and bottoms. So there's some uniformity between the relationship between this top and this top, as well as this bottom and this bottom, and also the swings in between. So that's a pretty high rating. It's above average. It's below the maximum, but it's telling us that there's uniformity in this pattern. Additionally, the clarity indicator is also rated pretty high. It's about an 8 right now, 8 or 9. And you're looking at what that's telling me is looking at a clean pattern, a pattern that doesn't have a lot of market noise or extraneous movement or spikes or gaps. So these two, as far as the aesthetics of the pattern, these two are fairly high. So it's a very clear and a very clean chart pattern. Now breakout, which has not taken place yet, is going to show us a rating here of 1 through 10 when it does break out of this triangle pattern. And what that's going to measure is the strength of the move through support and resistance, and that's going to show us the direction as well as the strength. So we want to look at something that has a high breakout rating. If you're a momentum trader, you want to make sure that when it does break out through support or resistance, that it clears that area cleanly, and that that gives you confidence that the market is going to be headed towards that forecast zone without any choppiness. In other words, it's going to be a volatile, direct move. The other thing you want to note is the arrow here, and this suggests the direction that Autochartist is looking for in this particular emerging pattern. This one is called a continuation pattern, and that's because this initial trend was down in the early part of the trade, or at the beginning of the trade pattern, and that if the breakout is going to be to the downside, it's going to continue what the initial trend already showed us. You'll also note that in an emerging pattern we have this grayed out arrow, and that means, again, it's an emerging pattern, and this is just a suggestion as to the direction it's going to go. Also, you want to note the length of the pattern. This is 24 candles. It took 24 candles to form this triangle. That means that that's a relative term. Traditionally, in technical analysis, the more time you spend inside of a pattern, the greater the volatility. So this is a relatively short period if you look at the overall recommendations that come out, but for a 15-minute chart, this is relatively long. So it depends. This is going to be compared against the time frame you're using. If you're going to use a 60-minute chart or 240, 24 candles is fairly short, but for 15 minutes, it's pretty good. So we'll watch this one. Right now, it's telling us that, you know, the market is trading inside this triangle and it's getting poised to move, and hence the name emerging. So let's take a look at other patterns that were taking place. Earlier in the morning, we had a British pound triangle pattern also that was formed about an hour ago, and you could see how this moved inside of the pattern after it was identified as emerged. This line here tells us that the pattern emerged at this time, and you can see how it adhered to this yellow line that Autochartist places in there automatically. You can see the market continued inside this line, and again, we are now waiting for this breakout to take place. All right. Earlier this morning, still, we had another pattern that took place. It was a channel down pattern, and that took place on the hourly charts, okay, or the 60-minute chart. And this pattern for the British pound, this is called a trending pattern, because you can see that inside of this channel, the market moved in a very clearly defined downtrend. And not only can you see that, but you can see that the clarity indicator also picked up on the fact that this was a very clear pattern. Now, when I blow this up, you'll see that the size of this candlestick through this resistance point, this breakout here, was very, very strong. You can see, again, by the length and the thickness of this candlestick. That showed us that there was a lot of momentum on that breakout, okay? And that's why we have this very high breakout rating, okay? So those are a couple of things that you'll be able to see on the chart as you get more experienced, and you'll be able to get a quick analysis done in this box here that shows you the strength of the clarity and the breakout indicator. Now, this was a longer candle stick pattern. This was 133 candles, and it was a 60-minute chart. So when it broke through, there was some significance. Traders had plenty of time to see this resistance point established, and they recognized that when it broke through, there was going to be a high momentum trade. After a market breaks through an area, it becomes a completed pattern, and Autochartist will post this gray box up here, which is the target zone, okay, or the target price levels. The first level is the 58.35 area, and then we have an upper level near 158.61. Now, as a novice trader or somebody who's new to the program, you may want to just look for these breakouts and look for that first objective. Now, as you become more experienced with it, then you may want to trade for a little bit more, but you'd have to apply your rules involving trailing stops, or you'd have to figure out a way to read momentum. So you may need an additional indicators or something that could help you determine whether this market's going to have enough power to reach the first objective or the second objective. In this case, you can see that after that first move up, the market kind of went sideways. Again, an experienced trader would know that this pattern occurred at 4 in the morning Central Time here in the U.S., and that was a few hours before the Bank of England meeting. So normally a trader does not like to take a position in before a report. So it looked like after that move took place that a lot of traders just left the market to wait for the news to come out. Now, the other thing that you want to look at is you want to be able to have a little, if you want to have a little bit of control over what you're doing in the Forex markets, you can hit the search button here, and you can take a look at some of the indicators that Autochartist shows you, so you can have a little bit of control over what you're looking at. If your list, you feel overwhelmed by the list. So you can also pick up whether you want to look at bullish or bearish markets. You can look at different pattern lengths. Maybe, as I mentioned, you may be somebody who's looking for longer patterns that have developed over time. And you can also set your clarity ratings. I tend to set everything at a minimum because I want to be a little bit more active. But as a new trader or somebody not familiar with the program, you may want to set something like a breakout strength to somewhere in the middle, so that you're capturing some high breakout trades. And even further, you can go all the way to the maximum. But then by going out that far, you tend to limit your searches. Okay, and besides the chart patterns, we can look at other patterns such as key levels. This is a very clean indicator because it's basically reading a straight line. As you can see here this morning, just again about 15 minutes ago, the U.S. Canadian dollar broke down through this 15-minute chart here, and this was a huge candlestick, and it took out the support level, and it's headed well towards its target price. So it's a very simple program to use when you're trading Forex markets. You can use sophisticated patterns like chart patterns. You can even go to Fibonacci patterns, and you can go to key levels, which are the simplest because they give you, again, a straight line that you have to determine whether there's momentum through it. And Autochartist helps you by showing you these high momentum trades that take out support, and then once it does that, it sets up this target area. And the process is the same with all these chart patterns that are in a breakout mode. You have to determine if this first level is your best level, or if there's more in the trade, and then again you have to learn to work your trailing stops. And oftentimes with a market like or a chart pattern like a key level, a simple rule is that if it's a momentum trade, you really don't want it to go back over this breakout area. So it's usually suited for a person that likes a quick trade, or again a scalper, or somebody looking for not to get married to a position throughout the day, but to take the fastest or quickest possible objective. All right, scanning this further, I want to take a look at Fibonacci's. There weren't really any Fibonacci patterns when I was looking this morning. I want to see if anything came up. As you can see, if there aren't any patterns, the program's not going to just make them up to find them. And it looks like we're looking at a situation where there really are no developments. We are looking at, there's one right there. We are looking on a day when you have volatility like today because of the bank meetings. You don't get a lot of Fibonacci patterns because they tend to be more longer in duration, and they need certain conditions to form. So in this case, this one formed a couple of days ago on a daily chart, and you can see that Autochartist will give you direction. It will tell you what kind of pattern it is. it'll tell you a particular target and when it can get there. So these are very good price and time. If you're a price and time trader, the Fibonacci patterns will show you symmetrical price and time patterns. Also show you retracement levels. So it depends on the sophistication that you want to have in your trading program. So you have, again, the ability to trade breakouts on the chart patterns in the key levels, and you get to be a little bit more sophisticated and target-oriented when you trade Fibonacci patterns. So again, this morning, there's another trade that popped up here. You can see the alerts usually go off and show me that the U.S. Swiss franc this morning on a 15-minute chart. These are all 15-minute chart trades, or being populated by 15-minute chart trades because of the activity in the central banks, as I mentioned. There's not a lot of long-term or longer-term intraday trades taking place. So this Swiss franc showing that it hit support, and this completed this support line, and now Autochartist is looking for a reversal of this trend. You can see the reversal came up here. And as a trader, you're looking for an early entry when this pattern comes up, and you can also look for your exit points, and for example, if this support area failed. So to make it simple, because we're going to wrap this up here in a minute, you always want to look for trades that suit your personality, whether you're a momentum trader or a support and resistance trader. Some people may want to buy support, some want to sell resistance, others want to look for breakouts. So it looks like this morning we had a little bit of each. We had continuation breakouts and we had reversal breakouts. And you can see that there's very little that I have to do other than to react to the trade and decide whether I wanted to trade the breakout or if I wanted to buy support and sell resistance. So I'll be looking, fielding your questions here if you have any, and feel free to ask me, what you want or what you need to know about the program. And our staff has been answering questions as we've gone along. So I am going to take a look here and expand this box out here so I can answer some questions. All right, let me see what my first question is. What do you pay attention to when you have a 30-minute chart that indicates one direction, then a subsequent chart that indicates a different direction? Well, that's a very good question. What I try to do is I analyze top-down. So that means that I look at the largest time period first. So I try to go for an intraday basis, 240, then I go down to 60-minute, and I look to see if there's a theme developing. If the trend is down on the 240 and the 60-minute, then I have to say that they may be overruling any kind of 30-minute chart that is in the opposite direction. I always know what kind of trader I'm going to be or what kind of trade I'm going to put on, whether it's a trend trade or a counter trend trade. So if you're trading with the trend and your 240 and your 60-minute are pointed down, then you want to then go with trades on the 30-minute that point in that same direction. If you are trading against the trend, then you have to you realize that on the 30-minute chart and give yourself a little bit of room or trade it a little bit differently than as if you were trading the trend. That may mean tighter stops or smaller positions. What I do see come up a lot, and I don't see the direction change very often, but what I do see a lot is the combinations of chart patterns and key levels. Sometimes I'll see that I have a key level that's emerging that's showing me a price way up above, and I also see a breakout to the upside. So what I do is I throw the key level in there along with my target zone, and I try to create clusters of support and resistance, or in that case resistance, and I try to match up as many numbers as possible to determine if there's going to be a crowd at that price, and that'll give me an idea that, you know, maybe I should get out of the market. So that's how I work with that. Let's see what the next question is. Let me see here.
Hi, Jim.
All right, let me see the next question. Yes.
I was wondering if you could maybe just give us a quick run through on an MT4 platform, just to how to put in the indicators onto the MT4 platform. There's quite a few people wanting to know how does it fit in there. Are you able to show us that quick?
If I have MT4 screen, close up my. Okay, on an MT4 platform, what you want to do is, of course, you want to make sure you have the plugin first, and then after you get the plugin, you want to make sure that inside this custom indicators, that Autochartist chart patterns, Autochartist Fibonacci, Autochartist key levels, and power stats all show up. After you make sure that that's been verified, you just grab it and drag it into the chart, and if there's and it's going to be read now by the MT4 platform. If there's going to be a particular chart pattern identified, it's going to show up then on the screen. So it's very simple to drop and drag a pattern inside of the platform that you're looking at. So if I had this, for example, dollar Swiss on the hourlies, and I wanted to look at key levels, I can just drop and drag this in there too, and that will be my automatically set up now to show, you know, that kind of indicator. Kind of caught me by surprise there, and I didn't have this platform up, but hopefully I answered that question. It's just a drop and drag into the platform as I was showing you. And then at the same time, you can also use other indicators to demonstrate support and resistance along with your Autochartist points. Doesn't look like there are any patterns coming up right now on this platform. Okay, any other questions? Let me go back to those questions. Did that help you, Yvette? Do they have any other specific questions?
Thanks very much. Yes, that was great. We've got quite a few questions. I don't know if you want to maybe just scroll through, see what you can answer.
That was the question they wanted, how to drop and drag it?
Yes.
Scroll through my charts again?
No, you can just have a look through the questions.
Oh, okay. Question about a large green or red bar. Does this usually mean breakout or breakdown? If you're using a candlestick, a green bar, it's going to be a up move or a higher close, and the red bar is going to be a lower close. That's why I look at it. Some people use black and white. I use red and green. So that I hope that answers the question there. All right. Let me take a look here. Some other questions we have. All right, as far as automating on MT4, you have to be more specific on that. There's a trading manual that comes along with it, and you can, of course, just use the program as is. It's already set up by dropping and dragging in. When there's a chart pattern, there will be a formation that shows up. If you wanted to get more sophisticated with it, just drop a line or an email to the technical staff, and they'll tell you how to set up various parameters on there if you want to look at, for example, emerging and completed patterns at the same time. Okay, here's a question that says, would I be correct in the perspective that a completed pattern is more reliable than an emerging pattern? Well, I wouldn't, as far as the emerging pattern to me is a warning that something is taking place, that I should be prepared for a particular move. If you're using a channel, for example, if I go back to my Autochartist charts, if you're looking at a channel, for example, like this, and you get an emerging pattern, they're showing you that there's room to the upside. So an aggressive trader may want to take this particular breakout and trade it from where it emerged up to the resistance point and then make the reading from there as to whether he wants to take it further. So you really don't have the statistics that you do, say, on a breakout. A breakout is going to show you, or a completed pattern is going to show you a specific target. So it does limit, if you choose to limit yourself to that first move. Whereas an emerging pattern, it's going to show you that you have this first opportunity to trade up to resistance, or any level in between there. For example, you may want to calculate a 50% move from here to here and say, well, that's all I want on this trade. Or you may want to take it further up to this resistance level. You may run into a situation where it hits resistance and comes back down to support. So if you're a swing trader, you may want to look at the emerging patterns for those types of trades. All right, if you're a breakout trader, then you're going to, of course, want to wait for the completed move. So as far as reliability, it depends on the read that you have. If you want to trade the swing and sell into this for a break back down, that's possible because this is extended resistance. And if you want to buy this falling support, yeah, you may choose to do that too. I've been known to trade both, but again, it's my background is in reading the market from my experience. So if you sense that a market's going into a range, then you may want to trade the emergings. And if you feel that there's volatility or momentum in the market, then you want to switch to more completed patterns. The same thing with whether it's a risk-on day, and that's a technical term for whether for selling the dollar, for example. So if it's a risk-off day. If it's a risk-off day, then the dollar tends to feel pressure. So things like the euro, the Aussie, the New Zealand dollar are going to have a bullish complex to them. So you may want to only search for bullish trades in those markets or upside breakouts. So depending on the sophistication level that you want to have, that actually helps you determine sometimes which trades to take. Now, as the program is set up, it's very easy to use. As you can see, you don't really have to know much about technical analysis. You just have to know how to read the breakouts and set your stops and also set your target zones. But if you want to get more sophisticated with it, then of course you can learn to take a trade from emerging all the way to completed. Let me go back to the questions here. All right, let's see what this question is. My point is that often a completed pattern often will give an arrow as a possible price point, whereas the emerging does not. Well, as far as the completed pattern will always give the target zone, all right, and the emerging pattern is going to show a particular direction. So here's an emerging pattern that is saying that there's a bias to the upside developing. All right. Now, when you look at a completed pattern, you're going to see that there's a target zone set up, and this shows an arrow where it can go. So I mean, I didn't understand the question, but there's always an arrow. Here's a breakout in the Aussie dollar, and it gives the arrow, and it tells you the particular direction. Doesn't mean it's going to follow that arrow, but it does give you direction, and it tells you the target zone. So in this case, this is a pretty accurate move here. The thing that you want to do as you develop as a trader is to know what to do if you hit the target or miss the target, and whether you want to trail and how much you want to trail. So, but Autochartist does the easy work or I'm sorry, does the hard work for you, because it looks for this pattern, first of all, tells you where the breakout is and sets the target. That's pretty much all a trader's looking for, is where's the breakout, where's my target. How sophisticated you want to be after that, is up to you, and that's a personal preference. Okay, Yvette? More questions coming in?
Hi, James. Okay, I think, yes, there are quite a few more questions, and we are so busy answering them on our side. So you can carry on for 5 minutes more, and then we can end off.
Okay, so can we combine two patterns to form an alert? Well, you can't physically do it yourself, but if you leave open the box to show you all three platforms, or all three tools, the patterns, chart patterns, Fibonacci patterns, and the key levels. If you leave all of those open, then what's going to happen is you're going to get a situation where all the alerts will go off when when those situations develop. For example, here's when I click on home and I have all of these boxes checked, I'm able to look at completed Fibonacci chart patterns as well as key levels. So in effect, that is, you are getting alerts on a couple of markets simultaneously. So again, if I wanted to look at Euro by itself, just the Euro, let's see, we're looking up the data. You can see that at 8:30, well, it was all channel up patterns. But I can see that earlier I had a resistance point on a key level set up too. So if conditions are there where you're going to have to go off at the same time, then Autochartist will pick that up and it's going to put it in the box. It is possible that you can have a chart pattern such as a channel up as well as a key level resistance come in at the same time, because they're independently searched. And does Autochartist provide stops as well? Since the chart patterns or the stop losses are more of a personal preference based on a person's risk levels and account size, it's virtually impossible to suggest a stop for everybody. So what we try to do is give you the breakout pattern and the target, and it's up to you to determine what kind of risk-reward ratio you want to get on it. And as far as any of the statistics, as far as accuracy and things like that, you can send an email requesting that kind of information, and you can then determine, which patterns are more successful or which ones are a little bit more riskier than others. Again, my experience shows me that you need to know at a minimum whether you're a swing trader or a momentum trader, and how fast your trigger is in terms of how fast you get out when a market is moving against you. For example, if you're a momentum trader, you tend to want to see the market go in your direction quickly, and any kind of hesitation or one candlestick turnaround, the momentum traders that I work with or myself, we tend to get out and start over again. Whereas a swing trader gets in and he realizes the market's going to have its ups and downs, and he tries to find points to trail. Where you run into trouble is if you take a breakout with the intention of it moving quickly to your target, and then you switch your strategy and start to trail stops and things like that. So you need to know ahead of time, what the style or what kind of strategy you're going to use. Yeah, so when you're working with the MT4, it doesn't populate the screen like it does on the web version. So if there's a pattern taking place, it's going to show you that pattern as it's taking place on the chart. You're not going to have a list of patterns like you do when you look at the web version. Did I understand well? Let me see here. You can use an MT4 with a pari. Let me take a look here. Okay, and you're getting questions on the statistics, and you can request those through Autochartist. The statistics, because they changed, and it's hard to for me to keep track of what they are right now.
Jim, can you please have a look
It's
at the...
highly accurate, though, as far as hitting the points. I'm sorry?
We've got quite an interesting question here on the quality indicators. I think it's Ante. Wants to know how we rate the quality, trend, uniformity, and clarity. And what's a good level, and which of the four is ranked higher? You maybe want to talk us through that.
Well, as I mentioned, the indicators that I look at, the two that I tend to look at are the breakout pattern. So if I'm getting here's a high initial trend, you can see that as this pattern was coming down, that there's a lot of activity here pointing down. So this was a very strong initial trend. Okay, so that's what I look for. Is I look for what the trend was prior to this chart pattern's formation. And I also look at, and I put more weight on the breakout, because I want to make sure that I know how I'm going to approach this market. If there was a big breakout or a solid breakout or almost a full candlestick through support, then I'm going to get a high breakout rating, and I'd know that there's momentum behind that move. As a trader, then I need to judge whether that momentum is going to continue, or if it was so much that I'm going to get a retracement. So I do pay attention to how strong the initial trend was and how strong the breakouts were. As far as the clarity and uniformity, they have to do with what the pattern looks like inside. Okay? You tend to get some, like for example, this activity taking place in here was rather flat, and you can see the uniformity and clarity was low. But I also know this was taking part during a time period when traders were anticipating a European Central Bank number. So you need to know that what's going to happen is news event or something out of the ordinary, some reports, holidays, something like that, they're going to affect what the uniformity and clarity look like. But once the market begins to break out, then I look for markets that are trading in the same direction as the initial trend, and I look for the strength of that initial trend and the breakout to continue. So those two I pay more attention to. The clarity, again, and the uniformity, they can change based on, again, the conditions of whether there's a report coming out or whether there's just tremendous, extraordinary volatility that could cause whipsaw action in there, and also whether we're on a holiday or just a thinly traded market. If you are trading a market, I look at FX majors. If you are trading something thin, such as a cross rate market, you may get some very poor uniformity and clarity readings, but you may get some very solid breakout or initial trend ratings. So that's what I try to do. Is if you're somebody who's trained at or conditioned to looking at the action inside here, then you'd want to see a higher uniformity or clarity rating. But I'm more interested in what it does on its breakouts, so I tend to focus more on the what it does on the breakout or the strength of the breakout. The other thing is when I see a that's dropping from a very high point on a channel, and by the time it breaks out here, oftentimes it's made such a tremendous move that it runs out of momentum on the breakout. So I'll get a low breakout rating. Whereas a triangle pattern, let's see if I've got a completed triangle in here somewhere, where a triangle pattern is going to give me, it tends to give me a stronger breakout because the market has been compressed. So different conditions will dictate which pattern I'm going to use, whether it's a trending pattern or non-trending, and also it's going to control the strength of that breakout rating also. All right, just find another interesting question there, Yvette.
James, I think we're going to actually end the session there. We'll leave the room open for about 5 minutes so that we can still answer some questions, but I think we can just end the webinar on your side for today now. But we're going to see you back in 2 weeks' time.
Okay, thank you very much for listening this morning and sticking around longer than we planned. I appreciate that. And have a great week trading. And I encourage you to use the program. Again, it's ease of use and it's high quality. Pattern selection are great benefits to an experienced trader or to a novice trader. Thank you very much.
And thanks to you, James.